This is the third video in our finance series in week 29. We are going to talk about the statement of cash flows. This is the most important, in my opinion, because cash is king, and this is where it shows where you get your cash and where it goes. So, revenue and your net income can be deceiving because even though you have positive, obviously positive revenue, positive net income, it can be deceiving because if your cash flows aren't where they need to be, you won't have the cash you need to operate your business. So knowing your statement of cash flows is important. And so like if you have a high revenue, like a high net income, that's great. But if you're paying out too much, if you have investments, bad investments, debt, that type of stuff, it could be decreasing your cash balance to the point where you have a negative cash flow occurring, and that is not good. You obviously always want a positive cash flow. So there's three different sections in the statement of cash flows. You've got the first is going to be your the money you got or lost from operating activities. So net income is going to take a part in this, but your changes in working capital is going to be in there. So that's increases or decreases in inventory, accounts receivable, accounts payable. Other areas where you could get cash are going to show up. It's where you get from regular operations. Second box is the investing in activities. And again, this could be positive or negative or as well. So it's if you purchase things for your business or sold stuff like equipment, actual cash investments. If you purchased, if you invested your cash, your business's cash in something, that would show up here. Or if you got money from somebody investing, or you sold those investments, that the investments is going to come in your financing activities, somebody investing in you. If you sold those investments, that's going to show up there in your investing activities. And a lot of companies use this part of their three sheets to make some money. So if you have a ton of, if you've got a bunch of additional cash out there, there's no sense in leaving it in your bank account. There are a lot of short-term investments that you can put that cash into that are pretty solid in terms of returns and security. And you can take that extra cash and you won't have it for a year, but you can make money on it while it's just sitting around, basically. So something to consider there when you're looking at your statement of cash flows. The third and final box is going to be the financing activities. So this is where you borrowed money or where you paid money back. Where investors gave you money, where you paid investors, you bought off your partner, that type of stuff. So all of this stuff's going to fall into your financing activities. So again, this is where you're getting or paying money that doesn't deal with normal operations. And this is where businesses who have a negative net income stay afloat, is with their financing activities. So you take a lot of technology companies, especially in the 2000s and as recently as now, where they have a great idea and they consistently lose money. And if you're following them and you're trying to figure out, oh, they've had negative net income for the past 5 years, how is that? It's because people consistently give them money so they can stay afloat. So they've got a great idea, let's say, and they just haven't quite figured out how to monetize it or how to make themselves more efficient so that they can start turning a profit, and people are taking a risk and giving them money so that they can continue to operate. So that's that. And then the last part, you're just going to see your change in cash. That is the, the beginning, what you had at the cash, what you made or lost over the year, and then what your ending cash value is or cash amount is. And then that goes up into your balance sheet. So all three sheets are connected in some way, shape, or form. And we have a PDF that kind of explains all of that to you. So make sure to check that out and reach out if you've got any questions.